Welcome back. We're diving deep today into something that honestly drives a lot of people crazy: auto insurance. Specifically, we're looking at sources that really critique the U.S. system. They focus on what happens when you, a responsible insured driver, get hit by someone driving illegally without any insurance. Okay, let's unpack this. Our mission is to analyze these sources, which argue this isn't just bad luck, they see it as a major policy failure. The core paradox here is kind of baffling, isn't it? Insurance is meant to protect you. But in this specific scenario, uninsured motorist hits you, the system, well, it often ends up penalizing the innocent person, the victim.
That's absolutely the crux of the argument in these sources. They frame it as a systemic problem, a real shifting of the burden. You see, the government says you must have insurance. But then, when enforcement doesn't catch the millions driving uninsured, the fallout, the cost of that lawlessness, lands right back on the citizens who follow the rules. It really begs the question, doesn't it? Why are responsible people effectively paying to insure against the government's own failure to enforce its mandate?
Exactly. That idea, insuring against enforcement failure, that's where the sources say the real insult lies. Think about it. You pay taxes expecting laws to be enforced, and you pay premiums for protection. But when an uninsured driver hits you, the system forces you, the responsible one, to absorb the costs of the lawbreaker.
Precisely. And the sources we looked at have a term for this compounding financial hit,
Yeah.
the triple penalty. It's this specific three-stage financial injury that an insured victim faces when they're struck by an uninsured or sometimes an underinsured driver. Maybe a quick example helps. Let's imagine Sarah. She's driving perfectly legally, stopped at a red light, then wham, rear-ended by someone with no insurance.
Okay, poor Sarah. Let's walk through that first penalty, losing her deductible. So to get her car fixed, she has to claim on her own policy, right? Using her collision or maybe uninsured motorist property damage coverage.
That's usually how it works. And that means she pays her deductible. First thing could be $500, maybe $1,000, sometimes more, just to get the ball rolling on repairs.
And that money, she doesn't get it back.
Typically, no. It's usually gone for good. The mechanism is called subrogation. Basically, Sarah's insurance company pays, say, $5,000 total for the repair. That includes the $1,000 deductible Sarah paid out of pocket. The insurer then turns around and tries to recover that full $5,000 from the uninsured driver who caused the accident. They're essentially trying to collect on Sarah's behalf.
But the driver is uninsured.
Exactly. And likely doesn't have assets the insurance company can easily go after. So the insurer recovers nothing, and since they can't get back that $1,000 portion that was Sarah's deductible, Sarah never sees that money again.
Wow. So she's out $1,000 just because the other person broke the law. Okay. But hang on, let's unpack penalty number 2, the premium increase. This is the one that feels really fundamentally wrong. Sarah did nothing wrong, 0% at fault, stopped at a light. How can her rates go up? What's the logic there, according to the sources?
Well, the sources are pretty clear. They argue there's no fair logic, just a financial calculation by the insurer. Often, insurers see involvement in any claim, even a completely not at fault uninsured motorist claim, like Sarah's, as a statistical sign of higher future risk. It sounds crazy, but that's the argument.
So they might bump her rates or take away discounts?
Yes, they might remove her safe driver discount or reclassify her into a higher risk category. So she's actually penalized financially for having bought the very UMEOM coverage that was supposed to protect her. It increases her future cost.
That is just the ultimate paradox, isn't it? You buy protection against lawbreakers and using it costs you more. And the third penalty, the sources mention the stress, the sort of systemic frustration.
Absolutely. It's the emotional and administrative burden. The sources describe it as the victim being forced to clean up the mess financially and emotionally left by a crime, driving uninsured, that the state is supposed to prevent. This whole cycle deductible loss, premium hike, the stress, it understandably makes responsible citizens question the whole system, the value of paying premiums, paying taxes, and the solution proposed in these materials isn't just tweaking things. It's about fundamentally changing the rules to restore some fairness.
Right. So if the current setup kind of protects insurers from the fallout of lax enforcement, how do these sources suggest we change their behavior, make them more aligned with the victim?
Okay, that brings us neatly to the first set of proposed reforms, the ones focused on shielding the victim from these financial penalties. And what's fascinating here, as the sources point out, is the underlying idea that current laws almost let insurers benefit from weak government enforcement. These reforms aim to flip that incentive.
So Reform A1 in the sources tackles Sarah's first problem, mandatory deductible waiver for these UMU1 claims. Sounds straightforward.
Very. It simply requires the insurance company to waive the victim's deductible right away if the claim is under or UIM coverage. The insurer absorbs that $500 or $1,000 loss, not Sarah. It tackles penalty number one instantly.
Makes sense. And A2, that hits the premium hike head on. A strict prohibition on rate increases for not-at-fault claims.
Yes, and the sources stress this needs to be actual legislation, nationwide ideally, explicitly banning any premium surcharge or taking away safe driver discounts or even non-renewing a policy just because someone had a not-at-fault claim, especially UIM.
It closes that loophole insurers seem to use?
It tries to, yes.
Yeah.
And to really solidify that, there's Reform A3, creating a risk pool for these UIM deductible losses. Now, if we connect this to the bigger picture, insurers often justify rate hikes by saying, well, we lost that deductible money we couldn't recover.
Okay.
This risk pool idea is clever because it basically removes that excuse.
How would that pool actually work? Where does the money come from?
Think of it like spreading a tiny cost across a huge base. Imagine a state has, say, 10 million insured cars. You add a very small fixed fee, maybe 50 cents, maybe $1, onto every single auto policy renewal each year.
Okay, a tiny fee.
Right, but multiplied by millions, it creates a substantial pool of money. That pool is then used specifically to reimburse insurers for those unrecoverable deductibles in UIM cases. The burden on any individual driver is almost nothing, maybe $1 a year, but collectively it covers those losses. So the insurer gets reimbursed for the deductible, and they lose their financial justification for raising Sarah's rates after her not-at-fault claim.
Ah, I see. So it shifts the cost of that specific enforcement failure away from the individual victim, spreads it almost invisibly across everyone.
Exactly. It collectivizes that specific loss.
Okay, that covers protecting the victim financially after the fact. What about the other side? The sources must talk about preventing these situations in the first place, tackling the uninsured driver problem itself.
They absolutely do. The argument is you need both. Protect the victim and reduce the number of uninsured drivers through, well, a mix of stricter enforcement and addressing affordability.
Let's start with enforcement. Reform B1 sounds crucial. Mandatory vehicle insurance verification or e-verification. What does that involve?
This is about using technology we already have. It means getting rid of the slow paper-based checks. It requires setting up a real-time electronic system. Think of it like your state's DMV database constantly talking to the insurance company's databases.
So instantaneous checks.
Pretty much. If your insurance policy lapses, maybe you stopped paying, the system automatically flags your vehicle's registration for suspension immediately. Some sources even suggest going further, having the system electronically void your license plate data if coverage lapses, making the car instantly recognizable as illegal if scanned by police.
Wow, okay. That closes the gap where someone cancels insurance right after getting plates?
It aims to, yes. It makes the consequences for driving uninsured much more immediate and certain. No more relying on random traffic stops or outdated paper cards.
And what if an uninsured driver does cause an accident? Reform B2 calls for asset seizure. That sounds pretty tough.
It's about adding real financial teeth, according to the sources. Right now, the penalty might just be a fine that often goes unpaid, especially if the person has no money. This proposal calls for mandatory court-ordered actions, like wage garnishment, or even seizing non-essential assets, things beyond what's needed for a basic standard of living, to actually pay the victim's claim.
So the person who caused the harm actually pays, not the victim or the insurance pool.
That's the goal, to create a financial consequence that matches the seriousness of driving uninsured and causing harm.
Okay, but enforcement alone isn't the whole picture. Some people drive uninsured simply because they can't afford it, right? The sources address that.
Yes, that's a key point. Reform B3 tackles this directly, creating a basic lifeline insurance program.
A lifeline program. So, subsidized insurance.
Essentially, yes. A government-supported, very basic, no-frills liability insurance option. Just the legal minimum coverage. It would be specifically targeted at low-income drivers who absolutely need a car for work or essential needs, but are priced out of the regular market.
But wouldn't that be expensive for taxpayers?
The sources argue it's actually cost-effective. They say the cost of subsidizing these basic policies is likely less than the total cost the system currently bears from expensive uninsured motorist claims, especially severe injury claims, which can run into millions. Preventing even a few major claims could, in theory, pay for hundreds of these lifeline policies. It's framed as a smart investment.
That leads into another fairness issue, doesn't it? The factors used to set insurance prices in the first place. Reform B4. Prohibit non-driving rate factors.
Exactly. And this raises an important question. Should things totally unrelated to how you drive affect your insurance premium? These sources strongly advocate for laws like the proposed PAID Act they mentioned that would ban insurers from using non-driving factors.
Like what kind of factors?
Things like your credit score, your level of education, even your occupation or marital status. The argument is that using these factors unfairly penalizes people, particularly those facing financial hardship. Poor credit shouldn't automatically mean you pay vastly more for legally required insurance.
It pushes people towards driving uninsured if they can't afford inflated rates based on things other than their driving record.
Precisely. The sources insist that if you base rates primarily on driving behavior, you make insurance more accessible and reduce that financial barrier, which helps get more people legally insured.
So, if we connect this all back to the bigger picture, the main takeaway from these sources seems pretty damning.
It is. Their conclusion is essentially that the current system functions like a hidden tax on responsible people.